The Schwab US Dividend Equity ETF, or SCHD's 2024 reconstitution has been completed, and a lot of investors are very unsure and unhappy about some of the new stocks that are within the ETF. If you want to see a complete breakdown on the new reconstitution, see which stocks were taken away, which stocks were added, stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now before we go through all the new holdings within the SCHD ETF, because trust me, there are some crazy changes, just to go over some of the basics on how the stocks even end up in the SCHD ETF in the first place. This right here says SCHD stocks are chosen from a list of US stocks that have a 10-year history of paying dividends. Now on top of that, the stocks in this group of dividend paying stocks are then ranked against each other of each of the following factors: things like their average dividend growth over the past 5 years, things like free cash flow to total debt, things like return on equity, and expected forward yield. And all in all, because the SCHD ETF does track the Dow Jones US Dividend 100 Index, and keep in mind this index has a pretty rigorous screening like the few that we went through a second ago, for the most part over time, because of these screenings, SCHD has had for the most part pretty high quality dividend paying stocks, at least historically. Now just to get this right out of the way, a lot of times when these reconstitutions do happen, there might be some amazing stocks within the SCHD basket that a lot of investors are pretty disappointed that those names are no longer within it, and this is because they obviously didn't make the screening requirements. And SCHD Stan Craig said it best on Twitter. He said it's one of the features of some dividend-focused ETFs. If a stock runs up a lot, like for example in SCHD, Broadcom or ticker symbol ABGO has, the dividend yield goes down and therefore it no longer qualifies. So this is a really good example and a really good explanation on why certain high quality dividend stocks that at one point were within, let's say for example, SCHD's basket of holdings are no longer in there. For example, like Broadcom, ABGO has done really well over time, and pretty much every single SCHD holder has been a big fan of the fact that SCHD did hold some Broadcom. But over time, if a stock runs up enough, the dividend yield is of course going to shrink, which no longer allows it to basically within the index that SCHD follows. But now to get to the interesting part. It says right here, the eliminated stocks made up 24% of the total value of SCHD. Below you can see the list of all the stocks eliminated in this reconstitution, along with their weight in SCHD on March 1st and their trailing 12-month dividends as reported by Seeking Alpha's portfolio function. So these were the stocks that were unfortunately eliminated, and I say unfortunately because some of the names in here I'm personally a big fan of. So the first one, the most controversial one, the one that a lot of SCHD shareholders are not happy about, is Broadcom or AVGO, which made up of 5.45% of the total ETF that is no longer going to be a part. Now the dividend yield on AVGO is 1.54%, so again, it didn't meet the requirements any longer. The next stock that's no longer part of it is Merck, another one of the stocks within the list that I was more or less a fan of. Another one is Automatic Data Processing or ADP. We have Blackstone BX, another one that I was sort of a fan of. We have ITW, Illinois Tool Inc. We have Triple M, which I honestly do not mind losing any 3M whatsoever. We have Allstate Corp. We have Newmont. We have Northern Trust Corporation, Williams Sonoma. We have Tyson Foods. We have Kellanova. We have NRG Energy. We have International Paper, First American Financial, Paramount Global, Lazard, Advanced Auto Parts, Federal Agricultural Mortgage. We have Stewart Info Services. We have Sturm Ruger. We have Ennis, and we have Hammy Financial. So this makes up 24% of the index of the ETF. This is a pretty massive turnover. Just as important as stocks leaving the ETF, the index, these are the stocks that are now going to be a part of the index. It says right here below, you can see the list of stocks that are entering SCHD as the market open of today. Schwab Asset Management has reported these stocks as part of SCHD's holdings in the portfolio section of SCHD's product page. No weight has been given as of yet, at least is what this author says, but they appear to be ranked in size order. So number one, and let me know what you guys think about all these names. I do want to go through them, but comment down below, of course, if you're a big fan of them, or just overall, let me know your thoughts. We have BMY, Bristol Myers, we have HSY, Hershey Foods, we have CINF, we have Cincinnati Financial Corp, we have Skyworks Solutions, CF, we have DKS, we have TRP, EWBC, APA, we have DINO, we have CHRW, MTN, We have NXST, COLB, NSP, LKFN, VRTS. We have OXM, HTLF, AMSF, GABC, PFBC, and lastly, FBMS. Now, I'm not going to sit here and pretend that I know a lot about every single one of these different companies. Some of them definitely ring a bell. I've definitely looked into a few of these, but for the most part, it's sort of a mixed bag. And honestly, just off of the first glance, I can sort of see why some SCHD investors are a little bit concerned here. Although we have to go back to the fact that the index that SCHD tracks as closely as possible has a rigorous screening method that has worked pretty well historically to allow investors of SCHD, for example, to make some pretty great returns. So are we going to trust that moving forward? I guess that's going to have to be up to the SCHD holder. Now, lastly, this is also very, very interesting. It says most of the rest of the added stocks have a very mixed dividend quant ranking. Below, you can see information extracted from the dividend tab of seekingalpha.com. So this is basically ranking the dividends that some of the new additions have, and again, sort of a mixed bag. There's definitely lots of safe dividends in here. Take BMY, for example, HSY, for example, but there's also some names in here that have a safety level of a D+, a C, or even a C+. So all in all, sort of a mixed bag, which, to be honest, that's sort of what SCHD has always offered, though. There's always sort of been certain names within the 100 or so holdings in SCHD which have been great, and some others that I'm not as much of a fan of. And honestly, it's going to be really exciting to see how SCHD trades in the up and coming weeks, up and coming months, and what the performance looks like throughout this next year. And on top of that, one of the things I'm going to be watching very, very carefully, and one of the things I think is still very crucial about SCHD ETF specifically, and a lot of these other dividend growth ETFs out there like VYM, etc., is if or if not SCHD is going to be able to continue to offer the dividend growth that it has historically. Now, I'm not saying that investors solely only invest in SCHD because of the fact that the dividend has grown consistently over time, but I do think that is one of the main reasons, or if not one of the top reasons on why investors are interested in this ETF in the first place. So we're going to have to see the inflows and outflows of this ETF and see if investors are interested in having more exposure to some of these new holdings. On top of that, see how SCHD trades over the next few months, and also very important, see where the dividend goes from here. Because remember, with different stocks within the holdings, the dividend yield is going to change substantially, especially if a majority of the holdings do offer, say, a lower or higher dividend yield. But all in all, for me personally, I'm still going to continue to buy up SCHD on a daily basis as of right now and build up my position until it's as big as I want it to be. Which for me personally, my goal for SCHD is to get to 1,000 shares, and then I'm going to start building out other things like DGRW and VU. But after all the craziness with the 2024 reconstitution, I lastly want to hear from you guys down below. Let me know plain and simple, with this new reconstitution in mind, are you currently buying SCHD, holding it, or selling it? Let me know in the comments down below. I want to get a read from the community. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.